Hi, everybody. Welcome back to Ox Talks. Thanks for watching the show today. Please like the videos, hit that thumbs up button for me, share the videos as far and wide as you can, please, and subscribe to the channel. If you haven't subscribed, I really appreciate your support. We're growing this community. I want to address the Boeing job cuts. Story came out late last week. And the reason why I want to share it is because I saw a second story yesterday about the job cuts. Boeing is basically saying, well, look, it's the strike that's forced us to have to now lay off these people. But I want to share this other article with you, and you guys give me your comments below after you kind of hear both sides. So out of Reuters on Friday, Boeing to cut 17,000 jobs and delay first 777X jet as strike hits finances. Now, Boeing, guys, is a Dow component. It is a stock that's traded on the Dow Jones Industrial Average, which is made up of 30 companies, right? So, it is what you would call, it always has been, kind of one of those blue chip stocks. Before recording today's show, I jumped on and checked the stock price of Boeing. As of January 1st of this year, Boeing stock was trading at $243 per share. It closed last Friday at $151 per share, okay? By my calculation, that's a 48% decline in the value of Boeing stock between January 1st of 2024 and last Friday. That's a substantial drop. So what's going on with Boeing? It says Boeing will cut 17,000 jobs. That's 10% of its global workforce, delay first deliveries of its 777X jet by a year, and record $5 billion in losses in the third quarter as the U.S. plane maker continues to spiral during a month-long strike. CEO Kelly Ortberg said in a message to employees that the significant downsizing is necessary, and here is the quote, to align with our financial reality. After an ongoing strike by 33,000 U.S. West Coast workers halted production of its 737 MAX, 767, and 777 jets. He says, we reset our workforce levels to align with our financial reality and to a more focused set of priorities. It's amazing how they, all this wordsmithing, I don't even know what that means. I guess it means we're going downhill. Over the coming months, we are planning to reduce the size of our total workforce by roughly 10%. These reductions will include executives, managers, and employees, so across the board, according to Ortberg's message. Boeing shares fell 1.1% in aftermarket trading on Friday. The sweeping changes, it says, are a big move by Ortberg, who arrived in August at the helm of the beleaguered plane maker, promising to reset relations with the union and its employees. It says Boeing recorded pre-tax earnings charges totaling $5 billion for its defense business and 2 commercial plane programs. On September 20th, Boeing ousted the head of its troubled space and defense unit, and that's Ted Colbert. Boeing, which reports third quarter earnings on October 23rd, said in a separate release it now expects revenue of $17.8 billion, a loss per share of $9.97, and a better than expected negative operating cash flow of $1.3 billion. Operating negative cash flow of $1.3 billion, and that is better than expected. Thomas Hayes, equity manager at Great Hill Capital, said the layoffs could put pressure on employees, it says, to end the strike. Striking workers who temporarily do not have a paycheck, do not want to become unemployed workers who permanently do not have a paycheck, Hayes said in an email. I would estimate the strike will be resolved within a week, as these workers do not want to find themselves in the next batch of 17,000 cuts. Reaching a deal to end the work stoppage is critical for Boeing, it says, which filed an unfair labor practice charge with the Labor Relations Board on Wednesday, accusing the machinists' union of failing to bargain in good faith. And hold that thought. The next article is going to address that. Ratings agency S&P estimated the strike is costing Boeing $1 billion a month, and the company risks losing its prized investment grade credit rating. And there's also calls for it to be kicked off the Dow. exchange. While our business is facing near-term challenges, he says, we're making important strategic decisions for our future and have a clear view on the work that we must do to restore our company. That's according to the CEO, Ortberg. It says even before the strike, and this is the crux, even before the strike began on September 13th, the company had been burning cash as it struggled to recover from a January mid-air panel blowout on a new plane that exposed weak safety protocols and spurred U.S. regulators to curb its production. It says Boeing has agreed to pay up to $487.2 million fine, spend at least $455 million on improving safety, and face 3 years of court-supervised probation and independent oversight. So Reuters now is saying that this last week Boeing is examining options to raise billions of dollars through a sale of stock and equity-like securities. These options include selling common stock as well as securities such as mandatory convertible bonds and preferred equity, according to the source. One of the sources said they suggested to Boeing that it should raise around $10 billion. The company has about $60 billion in debt and posted operating cash flow losses of more than $7 billion for the first half of 2024. That sounds, if you guys are executives or if you're in corporate finance, weigh in. That sounds pretty bad. So the analysts estimate that Boeing would need to raise between $10 billion and $15 billion to maintain its ratings, which are now one notch above junk. One notch above junk, but the shares are still trading, what did I say, 150 some odd dollars. I said as of last Friday, they're trading at $151 a share. Yet they're one notch above junk, according to this analyst's statement. Their credit rating and share price has been at risk for the better part of a decade because of mismanagement, and the stubbornness displayed in the strike may be the straw that breaks the camel's back. So with that being said, I want to share the article I printed out that came out yesterday on a publication called Common Dreams. And this is the reason for the thumbnail and the description of today's video. It says, after gorging on stock buybacks for years, Boeing announces mass layoffs. It says that, of course, layoffs were announced Friday. It says a move that drew attention to the company's massive spending on stock buybacks in recent years. Boeing spent an estimated $68 billion on executive enriching share repurchases and dividends between 2010 and 2019, spending that critics say refutes the company's claim that layoffs and inadequate worker compensation are necessary. Les Leopold, executive director of the Labor Institute and author of Wall Street's War on Workers, How Mass Layoffs and Greed Are Destroying the Working Class and What to Do About It, told Common Dreams in an email that Boeing is in trouble because it became a manufacturer of stock buybacks, not just planes. The corporate cure is always the same. Lay off workers, Leopold added. Stock buybacks and layoffs are joined at the hip. It's time they outlawed them entirely. It says Ortberg took over as Boeing CEO in August following the former chief executive's departure with a $45 million golden parachute amid fresh safety concerns at the company after a door plug blew out of the Boeing plane. So now Ortberg stands to take in $22 million in total compensation this year, and he announced that Boeing is going to delay the new 777 jet project. He also wrote, we must reset our workforce levels to align with our financial reality and to be more focused on a set of priorities. The same company spent $68 billion on dividends and stock buybacks over the past decade and gave its last two CEOs multi-million-dollar golden parachutes. So the former U.S. Labor Secretary Robert Reich wrote, what is unreasonable is Boeing's greed, okay? He says, John Holden, president of District 751 of the International Association of Machinists and Aerospace Workers, which represents Boeing's workers who went on strike a month ago, said in a statement Friday, management keeps walking away from the table, using the same old tired tactics of bargaining in the press. So I thought that was interesting because this article seems to kind of expose what's been, many, many years of huge corporate parachutes, share buybacks, things of that nature. And now we see Boeing basically saying, well, because of the strike, because of the striking workers, we have to lay off 17,000 or restructure everything. Seems to me, guys, leave your comments below. It's been a lot longer in the coming than just this recent strike. Again, I'm not an expert on this, just giving you two different angles, one from Boeing and its CEO's statements, and another one which kind of says, wait a minute, let's take a step back. There's been many, many years of financial mismanagement, benefits going to the top, and here we are. Okay, so leaving it there today, about 10.5 minutes. I hope that you guys enjoyed the content. Again, like, share, and subscribe, and I will talk to all of you soon. Thank you. Bye.